The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 13th. That's right, it is Friday the 13th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have a great day and a great weekend. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, our Tigers done well. Any ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow 43 points, 27.225 is the print. S&P flat at 3,009. NASDAQ 100 off 25 points. Trade out at 78.92. Russell's up 6. Semis are flat. New York Stock Exchange up 0.2%. And the Wilshire 5,000 is flat. So everything looking, well, we're going to go see what it's looking like out here. Spot volatility index trading out at 1388. That's off 0.4 of what is it? No, it's down 2 3/10% out there. Still looks like it's targeting that lower 13 area out there. So we'll take a look at that. Gold sitting right now just above that bottom of that daily profile that you and I discussed yesterday. That's at the 1499.50 level. You're at 1500. So that's something you're going to want to watch throughout the day. Silver's down 51 cents or 2 8/10%. Silver, I take that back. Light sweet crude is basically flat out here at 55.03, leading the charge to the upside. Booking Holdings 23.40. SVB Financials up 9. BlackRock is up 8. Humana up 8. Netflix up 7. To the downside, lead the charge dollar-wise. Shopify off $12 and change. Market taxes off 11. Chipotle down 11. Credit Suisse off 8. Mercado Libre down 6. Of course, I want to look at what you want to look at. So the first question to come in, Steve, thank you for your Hogs call 3 days ago. Now my question is, I need to reduce my risk. I want to take some money out, but since I own December and October contracts, which one should be the one you can suggest, please? Wowzer. Okay, that's a lot. But let's go see if we can help Ruby out just simply by taking a look at the hog charts out here. Oh, I take that back. Ruby, we're going to come back to you. But, yeah, we have call-ahead seating. That means if you call, you move right to the front of the line. And that is Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you today?
Thanks for taking the call, Steve. I don't mean to be a hog, no pun intended, but I guess I will take the first go at it if you want to do that.
Absolutely. Oh, no, absolutely. And look, everybody loves to hear from you anyway, so they want to hear what Brent is doing. So I can tell you, I can assure you that people do want to, they enjoy your call. So be a hog, so to speak.
I was going to say, I almost had it back-to-back on the gold. I did the same thing this morning, almost identical trade as did the 142 puts this time instead of the 142.50s.
Oh,
but,
okay, great.
It's worked out well. You just never know it's going to all line up. I don't do the of course, the futures contracts themselves, and so you have to have things kind of align the way you want, and it's been hitting more or less the high at the first thing in the morning.
Okay.
And so then that gives you, if you just give it a shot. And like I said, sometimes it doesn't work. In these two cases, it has, and so it just allows you to pick the things up. I like to do the diamond, something that's going to have enough of a movement within it to make it happen. And so gold kind of does that. It's a big enough instrument, and then of course the Dow itself has big enough price action to do it. So those are the ones I kind of like to focus on. And you can use just about anything you want, but those are the two I try to generally do, that or the SPY or something like that. So
yeah,
anyways,
and that's great
to relate that. And then go ahead.
No, I was going to say that's what's great about that is that, you've got this intuitive pattern going on with regard to when you see those highs coming in, as you continue to watch it. So something that really can't be taught, so to speak. And then from a technical standpoint, what's nice was that new profile that had formed yesterday. So it assists you in your so-called scalping trades out there, just as it does John in the Tiger's Den. And so, what's great is you guys both can watch. We all can watch that 14.12.30 to I take that back. I'm sorry. It's the level is 14.99.50 to 14.89.20 area. So congrats there. And natural gas. What are you doing? How can I help you out there?
I just wanted to get your thoughts on it. It seems like it's kind of holding price here. We've had a decent little run up to those levels that I talked to you the other day, and it had just a little minor kind of pulled back and seems to be, more of a consolidation here. I just wanted to see what you thought about it.
Yeah, so excellent point. First, with regard to the natural gas contract, and so I just want to make sure. But I'm showing that October is the current contract out here. That's what we're looking at, and at this stage here, and looking at its profiles, we don't see at this hour of the day 113. First of all, with regard to daily and weekly prices above the tops of those boxes. When I look at our shorter term time frame, 60, 120, 5 hour, there's not anything there that currently in the chart patterns that suggests warning to the downside. Price is up at a resistance area on those three time frames. The top of their boxes are all lining up in about the same range, $2.59 out there. So that's really your next resistance area that you're looking for price to pull through. But on the daily time frame chart for natural gas, I'm not seeing anything that would be, let's say, a significant topping signal. Let's do the wave count here. Yeah, wave count 4. So Basil has taught you and me, hey, when you get to that wave count 4, just be on guard for something, or maybe a small pullback, or depends on whether it's moving higher or lower out here. But I don't see anything that is broken inside of natural gas. And I know that you're long this via a couple of equities. If I quickly look at just a 30-minute time frame chart out here, again, no breaks of support. Price sitting here on a 30-minute basis, really right in a resistance area. So it's really like we just looked at with regard to the intraday time periods, but from the larger time period being daily and weekly, I don't see anything of significance that is showing up as a 114 in the afternoon. By significance, I mean some type of topping pattern.
Okay. Have you done any kind of seasonal work at all, Steve? I might have asked you about that before.
I haven't done that. Hey, Brent, would you just hold on through this break, and then we'll come back to you. We'll finish things up. We're just about to.
Absolutely.
Okay. We'll be back, folks, with Brent in Martinez, California. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We're on the line with Brent in Martinez, California. We're taking a look at natural gas. And what I have on the screen right now, Brent, for you is the monthly time frame chart. So I do not have a seasonal chart for natural gas that I can share with you. Of course, the question is prompted, hey, you caught a nice bottom at this stage. Is it one that's going to last for a while? And when I take a look at the monthly time frame chart, we can see that price is sitting right on Stevie's red line. Now, my red line, folks, that's what I refer to it affectionately, but it's really the oscillator unchanged line, and that's really referring to the price oscillator. It's just instead of showing the price oscillator at the bottom of my screen, I have this line that is drawn that tells me if price is above that line, tells me we have a rising price oscillator. If it is red, the price oscillator is below zero. If it is green, the price oscillator is above zero. And at this stage here, and it can really act as a nice support or resistance line. And so in addition to what you've seen on the daily time frame chart here, price is just sitting there right now trying to figure out whether it wants to get that larger term change in trend. Of course, it's only Friday the 13th, so we're just about halfway through the month out here. We really won't know till the end of the month, but it is the other resistance zone that shows up on my charts out here, and I wanted to make sure I passed that on to you. This is showing the potential of a TD setup 9 count, but if we were closed right here, which would be above the close of bar number 5, that count itself will not form, but we really won't know till the end of September. But price really sitting right at resistance, which then says to me, hey, what's going on those shorter term time frame charts to see if there's any kind of breakdown somewhere, and I don't have that as of yet. So I don't see any reason why you would change your position out here. But I don't have that. I don't have a seasonal time frame chart for you.
No, this is very helpful. It looks like if they can get above that area and hold above there, and that would be something to be watching for sure. So I very much appreciate
it would really
Steve.
suggest that you caught a nice change in trend.
Ruby and on her stuff, but I do thank you for taking the call and getting to it first. And
absolutely.
Have a great weekend and take care, and I'm sure I'll talk to you soon.
Sounds great. Thanks for calling. That was Brent in Martinez, California. And so now let's go back to hogs out here. Let's try to see what if we can figure out a way to help out Ruby, who is trying to figure out which contract that she might want to lighten up on. So here what we've got, Ruby. So we're taking a look at just to make sure we've got this right here. And I'll go back to your question. So you are looking at the since you own both December and October. So here's the October contract. And let me just turn the chart. Let me just turn pricing off for you. The reason I want to do that is because of the new profile that's formed. I want to make sure that it's clear for you to see. I'm actually just going to, for you, because of the way that you're looking at this, I'm going to turn off the weekly time frame. So we're just going to look at the daily profiles right now. What you can see out here, Ruby, is you've got a brand new daily profile that is formed. It's bullish in structure. And that says at 67.17 is your next resistance level, and any price move above 62.25 out here, then what that is telling us is that price should make its way up to that 67 level. So let me put up price to see where we're at right now. So it's above the center of that profile, and so this would say to me right now, Ruby, that the October contract is communicating to you that it wants to go ahead and try to target that 67.17 level. Now, just for the heck of it, let's go take a look at December. Let's go see, maybe December's formed a new profile as well. So let's put up the December contract, and let's just leave this for the daily time frame, see what forms out here. So here's the daily time frame. So this is really kind of cool because of the question that you're asking. So the daily time frame, let me turn price off. The daily time frame shows that the December contract for lean hogs, live hogs, this is a bearish structured box. This formed 2 days ago, and the resistance level here is 67.27. And you also have sellers that are present at 64.42, which is where I show that price is trading right now, right here at that resistance level. So if you're asking me which one should you take off or which one has more potential, I would have to go with the fact that it looks like the October contract has more potential just based upon the profile that we just looked at, because you're sitting at resistance in October. Price probably, maybe it does move up to 67.27, but that's where the real snipers are with regard to lean hog futures. So I hope that that helps you out. At this stage, that's the best that I can provide you with, and hopefully the trade works out well for you. So thanks for being patient, and thanks for writing in. Let me just check, see if there's any other questions that have come up here now that we're about halfway through the show, and the answer is no, not a darn thing out there. So which is just fine. So let's go take a look at the markets. We'll see if we can try to figure out what the markets are communicating to you and I. And really, it is this is I mentioned yesterday, this is going to be difficult if in fact this is a top out here, or at least I'm going to say it's difficult for Stevie out here. And the reason that it's difficult is because we've got mixed messages. For example, the cash marketplace, and that's what I'm going to really focus on right now instead of the futures marketplace. Let's take a look at the New York Stock Exchange. So here, you can consider this to be one of the wider swaths of the market. New York Stock Exchange, Wilshire 5000. We'll take a look at both of them. Inside of the New York Stock Exchange, earlier this morning, price went on to make a higher high from yesterday. So what that does is that negates the TD setup 9-count pattern out there that could have identified a top. So the New York Stock Exchange is saying, hey, strong momentum move to the upside out there. You're only in wave number 5. That's letter E on my screen out here. So no reason for the New York Stock Exchange not to continue higher, so to speak. Take that versus the message from, let's call it the message from the S&P 500 right now. The S&P 500 cash indice. You can see yesterday, Doji, no big deal. It is a bigger deal because I believe, based on my experience and truly understanding doji candles, many people totally misuse a doji candle. Really, your open and close need to be pretty much right on each other, or very close. It has got to be a very small-bodied candle out there. Yesterday was a doji. Right now we're sitting at a doji in the S&P cash. It means the open and the close are virtually the same at 3,011. And at resistance, doji candles mean a lot. It tells you the market is tired. Well, you still have an active in the cash indices. You still have an active TD setup 9 count. So it's very possible that now we've got two tired candles. Now, I don't know what today's candle session is going to look like. It's only 1:26 in the afternoon. Two tired candles up at resistance. And when I say resistance, prior highs out here, along with the TD setup 9 count. It would not surprise me to see futures, for whatever reason, Sunday night, Monday morning, start to trade lower, and for there to be a turn or at least a retracement back to 2966 inside the S&P 500. So we've got mixed market signals out here, totally mixed market signals. And it's as if the market isn't sure which way it wants to go. And I think that's what it's communicating to you and I. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back Look, folks, Dow at 54, S&P is up 1. So before we went to that breakout there, I was saying, we've got a market that's got different signals out here. As I scan all of the indices and all of the equity futures contracts, and so I'm always looking for an early signal. We know we're up at resistance. How do we know that? Well, we know that from a number of different factors. Here, if we just take a look at the S&P, the Dow, the NDX 100, the Russell 2000, we look at the longer-term picture. We can clearly see, I can clearly see the consolidation pattern that we're still in. Nothing that has broken out up there. So we're at those levels of resistance. We know about these TD setup 9-count tops. Just several things that show us up at or near resistance. We can take a look at horizontal trading ranges. You can see the NQ yesterday testing its trend line resistance area. If we take a look at the Dow, it has done the same thing. So everything up at resistance. So if there's going to be a market top, it should start. Doesn't have to start at 131, by the way, in the afternoon, but it should start soon. That's why I was saying it wouldn't surprise me Sunday, Monday to see that. But if we're going to see that, and I wouldn't want somebody to take action. In fact, let me make this statement. Do not take action based upon that last statement. Why do I say that? I say that because we don't have any breaks of support. For example, the NQ, the NASDAQ, arguably right now, the weak link out here, it hasn't broken a key level of support. It hasn't broken a breakout area. But the indice, the nice thing about that is you can see prices well away from that area, which is 78.25. We're at 79.22 right now. But the cool thing about the tools that I'm using, the charts that I'm able to see on all the different screens that are around me are, well, which equity futures contract actually, has a level of support that was either tested or had failed out here to give us some type of early warning signal. And if we take a look at the Russell 2000, what it did earlier today at the open was tested a key level of support. For it was 1583, even Steven out there. That level was tested. It was rejected. Watch 1583. If you see it close below that on a 30-minute basis, it may be a signal that this may be an early change in trend signal. But if I put up the ES, the Dow, we looked at the NQ, we're far away from those potential support areas out there. And the reason that I put that into play is there was another posting in the den here. Ruby was mentioning silver, so I want to just kind of tie this together for you. So here, if we take a look at the daily contract for silver, what we're going to see is prices tested support, much like the gold contract, which is the bottom of its daily profile, which is also the center of its bullish structured weekly profile. You would expect silver to find support here. The center of the weekly is 17.53. The bottom of the daily is 17.56. But if you take a look at this widest ranging bar out here, this is suggesting that what silver is doing is getting ready to set up an A to B equals CD. In fact, it's really confirmed that, other than the fact that prices stopped as support. So even though this looks like a good buy, and maybe it is a good buy, you've got to be careful here. And the reason that I say you've got to be careful takes us back now to that 30-minute contract. So you see how I will stitch all this together for you? Because if we look at the 30-minute time frame, a shorter-term time frame to try to figure out what's going on, look at how when silver broke through the 1813 level, did that this morning, that was a key level of support. That's what we're watching for in the equity futures contracts. If I look at the 30-minute chart out here, there's nothing to signal that this is a bottom right now. So price is moving down into that support level. It will not surprise me to see it fail. It won't surprise me to see it hold. Because it's a strong level of support. But I would be very cautious with regard to trying to take a long trade here in silver, especially going into the weekend and not having any kind of bottoming signal there. So that's how Stevie etches and stitches. I don't even know what that means. Etch-a-sketch. I etch and I sketch. Well, as long as we're sketching, let's go out to Denver and speak to Ron. Ron, thanks for calling. Thanks for holding. How are you?
Great, Steve. Thank you for taking the time.
Sure, my pleasure.
I just wanted to mention, I put some calls on Adobe, ADBE.
Yeah.
I actually did a bull spread for next Friday, and I did it because they bringing out their earnings Tuesday, and from what I'm reading, their earnings are going to be good. The last couple of quarters, it did move up after their earnings. So looking at the chart, does that look like a reasonable venture?
Well, I've been watching Adobe since September the 10th. And on September the 10th, I shared with subscribers, I said, here is a position that we're looking at to go long. And the reason that we were looking at that is because just as it formed the Rhodes Momentum Indicator top, it was forming a Rhodes Momentum Indicator bottom. And on September 10th specifically, it had formed a hammer candle. And that confirms the pattern. What I wanted to see on the next day was some follow-through. We had that little doji candle. It qualified as follow-through, but you know what? It just wasn't good enough for me because if this is a bottom here, I wanted to see price close over Stevie's red line. And what you can see is that yesterday, that level acted as resistance. Today, that number is 280. It's acted as resistance. I would feel more comfortable telling you that this is a solid bottom with price being able to rise, but I would need to see a close above that 280 level out there. The other thing that you have around 280, and the exact number is 281.46, is the bottom of its daily profile. So that's old support that really never acted as support. Maybe it did for one trading session out there and failed, but old support has really become new resistance out here. So I'm a little bit, it's a hammer candle. What I can see taking place out here in Adobe is actually one more push, at least one more push lower. It would still do that and keep this Rhodes Momentum Indicator pattern intact, or it could or it should be able to do that. Get us down to maybe wave number 6, letter F, maybe eventually gets to wave number 7. But right now, I can just tell you from somebody that was looking at putting my own personal capital on Adobe, I've held off on that trade out there. So now whether your call spread is going to work or not, by next Friday, it's so hard to, I don't have a crystal ball enough to try to figure out when. It's formed a strong potential bottom. This is a strong candidate out here, Adobe. But you know what, this thing could, because it has failed at the resistance levels, 2 levels that you and I looked at, it just makes me somewhat skeptical. And this could just finish an A to B equals CD to downside in the 261 area. The other reason why I didn't fire away or ask subscribers to fire away is because the market itself is so close to a potential top with those patterns that are out there. So many of the TDs set up 9 counts. We took a look at some trend line resistance that, you know, is Adobe, which it can because it's formed a bottom. It can go in the opposite direction of the market. But if the market is going to begin to pull back out here, and I'm just on guard to watch for that, you know, I didn't necessarily want to get into a long trade in Adobe per se. So your call is very specific to something I'm intimately familiar with right now, because I continue to look at this as a possible trade to put my money at risk at, which would then I would suggest that subscribers do the same. Now, Ron, I apologize. We're just about to go to break. So if you want to hang on.
Thank you very much. I appreciate it.
Yeah, if you want to hang on through the call, and then you can ask me the next question that may have formed based on what I just provided to you. So we'll be back after this break, folks. Stay tuned. We'll go back to Ron in Denver and try to finish out Adobe, ADBE.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with Ron in Denver. We're taking a look at Adobe. And Ron, the other reason to be cautious here with regard to Adobe is the monthly time frame chart, which has confirmed a Rhodes momentum indicator top. It did that last month when it created the bearish engulfing candle. And so when I watch the daily time frame activity and see it struggle at key levels of resistance, it just says, you know, there's really no reason why maybe Adobe isn't making a bit of a larger retracement down in the 244 to the 264 area. Now that's going to take longer time. You're dealing with next week, but that's what I see when I take a look at Adobe. So what other questions, you know, maybe have arisen in your mind based on taking a look at that information and data?
No, I appreciate it very, very much. The reason I got involved is the earnings are going to come out Tuesday, and since I already have the position, and I'll wait and see what effect the market thinks about, well, if the earnings, whether or not it has a positive effect on the stock.
So here's what I would do if I were you.
Did, so
yeah. So here's a suggestion.
See if it works. I bought the 277.5 calls and sold the 280. Cost me $1.15. I'm just trying to get to, 2.5, 240.
Sure, but here's the thing. Here's the thing, though. If you don't see price,
the reason I do it, the calls are so doggone expensive. If you don't do a spread, they cost so much money.
Yeah. So, but here's what I would do going into next week. If you're not seeing price close over, let's say 280, it's certainly the bottom of that daily profile level that I gave you, 281. I'd certainly consider, even if you've got a small loss, closing it out and just protecting the remaining capital. It's right now what it's communicating to you and I is at the bottom signal that it formed. It just hasn't confirmed. And if we do see the market turn, it just becomes a more problematic trade.
Okay. Well, thank you very much. Appreciate it very much.
My pleasure. That was Ron in Denver. Let's go out to Jupiter and speak with Bill. Bill, thanks for calling. Thanks for holding. How are you?
Good, Steve. How about yourself?
I am doing very well. Thank you.
So, Steve, I wanted to take a look at the 30-year bond. You and I spoke about it earlier in the week, and I made a trade off a TD9 count. I went long just for a short intraday trade. But your analysis, which seems to have been very accurate, was that you thought it was heading down in the 150-ish area, and it certainly is headed that way. So I'd like to have you, kind of walk through the 30-year bond again, and potentially before you finish, maybe we could take a look at the 30-year bond in the four major currencies as well.
Sure. So let's do that right away because that is really kind of the overriding key here. The key here is in understanding how Treasury bonds are traded in all major currencies is what we're looking for buyers. So if somebody is to take a long trade here, you want to at least start to see buyers somewhere. They don't have to be necessarily in U.S. dollars. You certainly want to see them somewhere. And as we take a look at the U.S. Treasury bond priced in dollars, euros, yen, and pound sterling, we're seeing nothing but sellers here. And this is what can really rev things to the downside and should continue to rev things to the downside. Now, the nice thing is that what the 30-year Treasury chart did for you and I was it confirmed a Rhodes momentum indicator top. So those are great topping signals, how to sell a top, how to find a top, how to find a bottom out here. Now, today is going to be day number 8 on the daily chart of its TD setup potential 9-count pattern. Obviously, you would need one more bar. That would be Monday's bar, and as long as it closes below the bar from 4 days ago, then you're in good shape out here. The price target is 153 and 27 seconds. That's where price most recently broke out. But the TD setup 9-count doesn't have to bottom on bar number 8. It could be bar number 9 or make the lower low, or it could be bar number 10. So at this stage here, we'd have to say, okay, well, what's going on in an intraday time frame chart? So on an intraday time frame chart, is there any signal of some kind of bottom? And as we pull over the 30-minute time frame chart here, what that would require, Bill, is that would require a close above resistance. And resistance, what we would use is simply that TD setup 9-count. That would tell us where the breakdown resistance is. The current one is at 159.16. Now, that formed about a half an hour ago. It looks like at about 1 o'clock. And at 1 o'clock on a 30-minute basis, that was the 9-count. The bar following that went into 9:30 was a slightly higher low out here. And so as we speak right now, 147 in the afternoon, it would not surprise me to see T-bonds move higher from here. But that would just be nothing more than a bit of a counter trend rally because price would have to close above resistance. That would be 159 and 16 seconds. Then at 160 even Steven, you've got another resistance zone out here. But until that happens, pressure is to the downside. Would, again, not surprise me to see a bounce or sideways-ish move out here, meaning not a continued move lower, just simply because of the intraday time period. But nothing here is suggesting that this would be, let's say, a buyable bottom, other than if you were just a real scalper out here. And I would, at this stage, I would really have to do some work on the intraday time frame charts to even say that that was even a decent enough trade out there. Because if everybody's selling, these little counter trends will not last for very long.
No, that's terrific, Steve. And that is what I did the other day. I took that counter trend trade off of the 9-count. Okay. Obviously, you're seeing it again here, a slight bounce. But, no, terrific analysis. And, boy, isn't that critical to look at the four major currencies. Everybody's selling. That's interesting. So it's certainly, if anything, you want to go short, you certainly don't want to go long at this time.
Yeah, and the real short signal, came from it came from two things. It came from the top that formed, the Rhodes momentum indicator top. That was your early signal for aggressive traders. As soon as the bear sash candle formed about 5 days ago, that was the signal. Then all you're really doing is looking to see what's happening in major currencies or where is any other support, which would be the daily profile. But price closed below that on September the 9th, so that was on Monday. So there was another suggestion to tell you that the short side was the correct side to be. And now we'll watch to see where price moves to in relationship to that breakout level, should a TD setup 9-count pattern form. And if it does, and it forms above that area, then that could be a buyable bottom. For how long, I don't know. We'll just have to take a look and see what's going on. But we would do the same things. We would be paying attention to how it's trading, how the 30-year is trading in the other major currencies, what's going on the shorter-term time frame charts to help us, at least assist us with the probabilities in putting on a trade and where we would enter and exit. All right, my friend?
Terrific, Steve. Just one final question. When you set up the 4 major currencies, what are you using for charts, and where are you getting that information?
Yeah, okay, so great question. What eSignal allows us to do is, in essence, create any kind of symbol that we want. So if I wanted to, just as an example, so I'm getting it from eSignal. And here, if I wanted to take a look at, if I wanted to create a ratio, the S&P divided by Apple, it allows me to do that. Here would be that ratio. Now, this is in bar format out here, but eSignal is the vehicle that I have found that allows you to go ahead and track anything in any currency that you want.
Okay,
Alrighty?
Terrific, Steve. Thank you very much. Have a great weekend.
You too. And folks, we'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Another question that came in the den. I apologize I didn't get to get this work done for you, John, which was where was the apogee lunar phase pivot point out here. I was looking at the wrong. I was multitasking, just doing too many things at one time. But at 9:33 this morning, that was when the moon was at apogee, meaning it was furthest from Earth during its current lunar cycle. For some strange reason, I'll call it a strange strange reason. It acts as a support or resistance level out here. It is to be paid attention to from a trading standpoint. That level is 30.1275 out here. So you're going to watch 30.1275. If you see a close above that level coming into today's close, there certainly is no signal here to be short the market. By the way, we're trading at 30.1125 right now. So it's an area to certainly be watching for an early change of potential change in trend signal. You really need to see those other support levels falter or fail. We talked about the Russell 2000. We're going into another 30-minute bar here in about 5 minutes. We can see the 1583 level is under attack. A close below 1583 in the December Russell 2000 equity futures contract could also be an early warning signal out here. We don't have it. You like to see it in unison from everything, but let's just stay focused, stay tuned. The sideways-ish move, higher move, can certainly stay in play out here for a while. You've got that spot volatility index still well below its 50-day exponential moving average. That number now is 1657. But you really want to watch the spot volatility index as it gets down to that level of 1321. The low today so far 1351. So it's getting close. No cigar just yet, but getting close. So, folks, hopefully you had a great week. Thanks so much for being here. Hey, Monday morning, I believe I kick off the 9 o'clock hour. I believe I'm filling in for Larry on Monday and Tuesday of next week. So please join me then. We'll take a look at what the markets are doing at that stage, and I'll give you my best read on what the charts are communicating to you and I. So have a fabulous weekend, and we'll see you next week.